Okay, amazing day, amazing.
I'm gonna smile for them, yeah. Wave to them, yeah. Say hi to them, yeah. Then it's bye for them. I don't need to be looking sweet every time I walk in the street. Man, a good soul, man, a good soul, yeah. I don't need to follow.
Okay, amazing day. Can you hear me? Hopefully.
Man, a good soul.
All right, let's go. Amazing day, guys. I hope you guys had a good weekend. Let's get started. It's Monday. Sun is shining. Okay, we've got air in our lungs. That means everything is going good. All right, everything going good. We're gonna go and have a look at some of these markets. I'm going to start off with. We're gonna be looking at today. We're gonna be looking at US 30. We're gonna be looking at gold. And we are going to be looking at GBP USD and UJ as well. All right, so let's delete everything off our charts and see what's happening. Try and take this. Just try and start from the tipping top. Start from the top. I'm hearing alerts ringing. Trying to work out what those alerts are. Don't want to miss any trades this week. Want this week to be an absolutely fantastic trading week. Okay, and that's our gold. Let's have a look at gold first. All right, so this is all the way out. This is all the way out of gold. See what's going on with it. This is gold zooming all the way out on the daily chart. And you know, I've been bullish on gold. Wanting to get a chunk out of buying. Lots of fundamental reasons why gold is still a bullish asset. Okay. Now I'm just looking at this now. I'm drawing in some ranges. I'm going to zoom all the way out. Computer's struggling for some reason. Something's holding it back. Not sure what it is. Okay. We'll have a look. We're going to draw in some ranges. What do I mean by that? I'm just going to connect the dots. I'm going to connect the dots so we can kind of identify what this market's been doing. Okay. So this market has been trading. There's a much bigger range here. This market's been trading within, taking into consideration this data point. We can narrow up the range a little piece, like so. Whoops. Like so. Give it this one. All right, and within that, we can see how the market's accelerated, like this. All right. I'm gonna make that a different color. Let's zoom down and see what the market's been doing. The market's kind of in the middle of that bigger range, okay, which is a much bigger range. And we're going to connect some more dots to see what's going on with it. All right, I can get rid of this one. We're going to connect some more dots. This one here, looking like this. Okay. This one here. All right, trying to touch the top of this range. And then we can even narrow that down some more. Have a look at this market's been trading within this range here. This was the bullish impulse in here. Now, how am I drawing these lines? I'm drawing them as a guide first and foremost, but I'm making sure that I touch, you know, swing lows and last lows before highest points. This isn't the best line. This is the best like this. This is more so looking at this, and then there's a further acceleration, bullish, which was like this. Look, from this here, like so. Okay, so if I make that green, let me zoom in so you guys can see it. I understand how I draw my lines in. I draw my lines in as guides to understand the different cycles of the market, whether it's bullish, bearish, or sideways. All right, whether it's making higher highs, higher lows, lower highs, whether it's making equal highs and equal lows relatively. Okay, so the market was trading within this range for some time. Okay, the market was trading within this range. Double click. Trading within this range for some time. This range is taking into consideration the highest point and then the lowest point that I made after that highest point that the market was trading within that box. You can see an indication of what the market might want to do here, pushing down here, closing outside. Therefore, all of this is going to be correction, and we may see potential continuation pushing down here. Okay, now the overall market is bullish, but we might see a retracement in this market. Now, looking here on the daily, on the 4-hour time frame, and if we wanted to go up to the larger time frame, we can see a lot of imbalance. You can see a lot of reason why this market might decide to push up in here, okay? Let me identify that with our little square, the rectangle. Between here and here is imbalance, and the market's actually pushed all the way up to 50% of that imbalance. Now, is it happy with that? I don't know.
Jay,
I don't know whether it's happy with it. Go on, Darren.
I can hardly hear you, man. I can hear the music, but I can hardly hear you.
Okay, let's do this. Let's see why you can hardly hear me. Should be able to hear me. I'll tell you what, let me see. Make sure I'm on the right mic. Should be able to hear me well. Let me go to the settings and crank some stuff up. Thank you for saying.
Cheers, brother.
There you go. Is that better?
That's better. Yeah. Loud and clear, fam.
Thank you very much. And sorry, I apologize. All right.
Thank you, man.
No, thank you, bro. All right, listen. So sorry. So you missed all the source. All right. Basically, I was just saying that we can see here in gold. I am bullish in gold. However, we might be seeing a retracement now. We can see the market was trading within this box over here. All right, it doesn't look like a box on the daily time frame. On a smaller time frame, it does. And we can see that it created some imbalance here. Now, it's tapped all the way to 50% of the imbalance. That's where that wick tapped into. Okay, is that enough for it? I don't know. I don't know whether or not it's done, or whether it wants to keep going and pushing and closing up the whole imbalance. I do not know. Okay, but we can see the market within those ranges. So if I was to do a little line, you know, maybe something like this is happening at the moment. And ultimately, you know, I want to know whether we're turning around or not. If I drop to my hour time frame, it becomes a little bit clearer of that little push up in here. Okay, see this market making higher highs, higher lows, higher highs, higher lows. We're here at the moment. Is this market going to make a higher high again up into these levels? Maybe, because there's imbalance that it hasn't fully closed. Yeah, but either way, I want to. That's what I want to know. That's the question I'm asking myself. Is this market going to tap up further into that imbalance and then turn around? Okay, or is it ready to turn around now, or does it not even care about that imbalance, wants to continue pushing up? I do not know. Okay, but what I'm going to do is I'm going to pop in some alerts to keep an eye on it. All right, to see what's going on. Drop down to my 15-minute time frame. Let's have a look on the 15-minute. So on the 15-minute time frame, we can see we're potentially, there's some structure up here, 15-minute structure. Maybe the market's going to break above that and push up. Who knows? Either I've got my alerts in watching this. I don't really want to get involved in until I see something happen, because I want this to start continuing and breaking structure down here and keep coming down. I just don't know yet if that's what it wants to do. So I'm not going to be too early. We're going to make sure that we understand the different sessions. All right. Obviously, it's been the weekend, but we definitely want to understand the cycles of these different sessions in regards to Asian session, New York session, London session. Okay. So, you know, normally we see in Asian session, we've given it sleeping. That's the characteristic. Accumulation, the market kind of just accumulating, going sideways. Then we normally see, you know, the market, being manipulated, making some sort of manipulation move, taking the highs, yeah. And then we normally see the market make it smooth, all right. Then afterwards in New York session, we normally see the market make it smooth. All right, that is something that is common to markets that share the United States dollar. All right, we see this, these different cycles. This red being Asian sessions, yeah. Then we see this London session, which normally we see liquidity capture, like manipulation below Asian lows. Okay, let me I'm going to give this to you guys. We went over this extensively in the past. We go again. Asian sessions, okay, within Asian sessions, we see this market essentially, this ain't a great example, all right, but I'm going to use it anyway because I don't want to cherry pick anything. I just want to, be able to show you guys, general concepts that you can use when you're trading. Cherry picking is easy. We go back in the past and find a perfect scenario. But in this area here, this becomes an Asian session low, Asian session high. How have I done that? Because I've used this indicator here, which is just called kill zones. And it's identified Asian session as this red block between a certain time and a certain time. Okay. Then we've seen London session, which is a slight overlap of the Asian session between a certain time and a certain time. And then we see New York session open up, okay, which is this white line between a certain time and a certain time. And there's an overlap there. So what we normally find is that Asian session, we can have this as a kind of playbook, okay, as a kind of play, is that within an Asian session, we're looking for that Asian high and Asian low. We normally, within London session, we see that kind of area kind of swept. Can you see over here? This nam liquidity grab, yeah, pushes down below this Asian session low. And then after that, we see this push, all right, this move that happens. Now, normally, like I said to you, what we do is we have to be in a position whereby we want to see in the Asian sessions markets kind of sleeping. Yeah, this gold isn't a great example. We'll go and we'll look on, say, for example, we look on GU, for example. Okay, it's going to be easy. Or even US 30. Let's have a look at US 30 as it's ringing at the moment. Let's have a little glimpse at US 30 real quick. Let's click it. Let's see what's going on with US 30. All right, so you should know I'm bearish on US 30 of overall. Overall, I've got a bearish, I'm bearish on it. All right, so it's early in the morning. I'm seasoning up. Yeah?
Momentum, bearish momentum.
Yeah, so it's just I've just got a bearish. It's all come to me in a minute. Yeah, allow me. It's Monday. Yeah. I'm bearish on it, okay? So we can see this market's come up here, all right, in this US 30. If we zoom out, let's zoom out. Let's zoom out. And we're gonna draw in some lines here, okay? Like the overall market, we know that the overall market for US 30 is a bullish market. We know that because we've spoken many times and we've spoken about this is how this market is designed. It is designed to be bullish. It is designed to go up and up and up and up and up and up. Why? It's the top 30 companies in the United States. And every single Monday when they sit around the boardroom, they are not trying to work out how to make less money. They're trying to work out how to make more money. All right. Now we can see here that the market, if we move this down here, oops, like that, we see over here, the market, let's delete one of these, the market, let's delete another one, let's delete one of them, what's going on? All right, we can see that the market took this liquidity above these highs. God, my computer's moving mad. Everything moving 2 minutes after I do it. All right, took these liquidity above these highs. Nam. All right, and then we're sitting at the top of this range. How have I drawn this range? By taking some data points, pulling out a parallel line over here. Okay, I'm expecting to see. The only issue is what I don't like about this trade, what I don't like about this market at the moment, is that the market is kind of sitting in the middle of a range. Okay, it's kind of sitting in the middle of a range. So I'm not over the moon about it. I prefer to probably look at GU, but we're kind of sitting in the middle of this bigger green range, which means, we could go up, we could go down, we could do what we want to do at the moment. It's kind of sitting in the middle of the range. All right. Now here's COVID. This little situation over here is COVID. Without COVID, we've got quite an easy, tight range. Without COVID, that throwing a spanner in the works. So what I sometimes do is I use COVID as a data point because it is a data point. But I also have a look here. If I just pull this out, I also use where things would have been without COVID. Okay, because sometimes I say that COVID is a bit of an anomaly. All right, I'm pulling this line out from the wrong direction. Let's put it out from where it's supposed to go. So, we can see some data points here, and this is COVID-19. All right. Now, if we was pushing up, we was using everything without that COVID-19 and without that other anomaly. We see this range in here. Let me try and draw it nicely. Without my computer being all over the place. It's kind of like this. Okay, it's kind of like that. Okay, and the market trading within. If I was to pull out a parallel line, it would work as well, right on top of it. Okay, now that doesn't mean that we don't take into consideration COVID. We do. We have to. COVID is a significant data point down here. Okay. But the point I'm making to you is, I'm just looking at these different areas of interest that the market's respected. They're data points. It doesn't mean that's where the market's going to turn. It just means that there are things that I should keep my eye on. All right. I don't know whether the market's going to decide it wants to go all the way back to COVID lows or that COVID trend or not. So I just have it in there, sitting in there, warning me, reminding me, letting me know who I want. We can see how here the market pushed up in this is the impulse. Why is it the impulse? Because I'm touching the last low before the highest point. Okay, which is over here. And then since then, we've seen the market break outside of there, and structurally, even if I go to my daily time frame, we've seen structure break it. Yeah, like if I go to my daily, have a look at how clear it looks there. Okay, on my daily time frame, the market came up to that little white line, what a coinky dink. Okay, that little white trend line, and then we've seen structure being broken, all the way down to this level here. But the market's making an indication potentially of what it wants to do. This correction is come up into here, and we're potentially getting a continuation. Now, sometimes what we like to do also is a bit of confluence. Is look at where is 50% of the impulse. Look, if I pull this line all the way down to here, to this point here, so if I turn all the way from the top to the bottom, right here where the market turned around and had a reaction, hasn't quite turned around yet because it hasn't broken this lower structure, but had a reaction, was exactly 50% of the range. So that starts making me think to myself, okay, maybe we're ready to start pushing down. This is an indication. Correction came up to here to 50%. Look, on the nose. This is 50% on the nose. And then the market's pushed out of here with indication and once again, corrected. And I'd like to see a continuation coming out of it. Does that make sense? Or does somebody want me to explain that one more time of why I'm thinking to myself, maybe this market might get bearish? Maybe. If anyone wants me to explain it again, I will. All right? If anyone wants me to explain it again, I will. If everyone gets it of how I broke.
Can you explain that again, please, beloved?
Of course I can. All right. So have a look. I'm looking at this market, which is overall a bullish market. We know that, okay, because it's US 30. It's designed to go up and up and up. But we also know the market's moving waves. Look, when it was up here, even though it was a bullish market, the market fell from up here all the way down here for 8,000 pips. Okay. So the reality is we understand that this market moves in waves. Now, the problem I have is that the market is currently sitting in a bit of a middle of this range. It's kind of sitting in the middle of these two yellow lines. That's my concern. Okay. So therefore, if we think to ourselves that maybe the market is still moving bullish, but it wants to push up first and then make a 50% retracement and then push back up. Okay. Then we are trading as day traders. So maybe from here, let me show you another 50% line. From here to here, can you see this 50% line? I'm going to move this over here and make it a 50% line. I'm going to make it green. So maybe the market is trying to get back down to there before it continues pushing up because it wants to push up. It's designed to push up. There's other reasons why it might not push up, fundamental reasons, etc. But it's designed to push up. But in its journey pushing up, is the market may have made an impulse over here and then it wants to get bearish back down to this 50% before pushing back up. So therefore, on a smaller time frame, we drop down to our daily time frame, we see how the market, even if we're looking at it from this perspective of the high over here when it started to break the structure, the market touched our little white line, which was our range that we drew from touching some data points. And then we had a reaction of it breaking structure. These white lines are structure. So therefore, this is an indication. I'm saying even though this market might want to do this from here, do this, and then do this. It might want to do that based upon what it has been doing. So, but I'm talking about us as day traders catching this push all the way down here towards a 50% line. At the moment, we've seen it break structure. When it breaks any structure, the first thing it wants to do is it wants to correct and then continue. So therefore, we can do the same way we got this 50% line here. We can do it from the impulse from up here all the way down to where it impulsed to, and 50% is right here. What a coincidence. That right where that 50% line is over here, from this impulse pushing down bearishly, the market's gone and tapped that 50% line perfectly on the lips. So when it tapped that 50% line, then we're expecting it to indicate, because it wants to go down. We're saying it wants to get to this green line over here. This was an indication. This was a correction, 50%. Then it wants to get down to this green line. So we've had an impulse come down here. Yeah, and then we have an indication, sorry. Then we've had a correction, it coming back up in here. And I'm wondering whether, as a day trader, someone who's trying to take advantage of the market right now, whether I'm going to be able to take advantage of this market continuing at least down to this equal low. Okay, but ultimately to this equal low and beyond, because beyond is getting to that green line. What if I can just stop this doing what it wants? Is getting down to that green line. Now, is it going to happen like this, like a missile or like a drill going straight down? No, it might wriggle all the way down here. It might wriggle for a week. It might wriggle for 2 weeks. Who knows? I don't know how quickly it's going to get down there. But I'm interested from this top of this range, after seeing an indication coming down here, after seeing a correction back up to the 50% line, I want to get into the continuation, which is it pushing down in this level. But at the moment, I'm part of this correctional phase out of this area here. So I want this market to really turn around right now. And on a smaller time frame, have a look. The market was going sideways, right up against this line in here. It was going sideways. Yeah, and even on, and once again, the market's fractal does the same thing over and over and over again. Out of there, we have an indication out of that orange box. This is all of this. Now we're having a correction, and I would like to see it continuing and breaking outside of this yellow line, but we do not know yet. That is what I'd like to see. That's my bias. That's what I was looking for, that word. I have a bearish bias. Yeah, that's what I was looking for earlier, all right? That's my bias. My bias is that I want to see this. See that right now? This is that correction. I want to see it coming out here. Now, if it breaks past this consolidation and starts pushing up here, okay. I'm not going to say I'm dumb. I'm not going to go back to the drawing board, so I don't know how to trade. I'm just going to say something else is going on in the world, and the market has decided to do what it does. I don't have control of this market. I can't, whoopsie daisy. I can't dictate what this market does. I can only have my biases, and then I can read and react. That's it. A lot of people, what happens is they start trading and they say, yeah, this is going to go up. They hit the button for it to go up and it goes down. And they think to themselves, oh my God, this strategy is nonsense. I need to go and find a new strategy. I need to go back to the drawing board. I don't know what I'm doing. Don't let that knock your confidence. Understand that you're in the boxing ring and you're going to get punched to the face. That's it. If you can accept that you're going to take punches to the face as a boxer, you're good. If you can't accept that man are going to try and punch off your face, yeah, as soon as you get into the ring and man clap you, you're going to be like, whoa, I'm out. Forget about this. I'm not on this boxing team. Man punched me in my nose. Well, you didn't read the terms and conditions. Those are part of the terms and conditions. You're going to get punched in the nose. You are going to lose trades. It doesn't mean that your strategy is incorrect. It doesn't mean that your concepts or your ideas are correct. And you will see this time and time again. As you go and take a trade, it loses, it stops you at maybe going there a little bit too early. Then you look again in a couple hours later and it's gone to hell. And you was trying to get in there for the sell. You're like, I missed it. I got stopped at before, then I missed it. Well, you know, if you believed in your strategy, you would have stayed steadfast and kept looking at it. Now, we've seen this market pushing up here now, closing an imbalance. Have a look how this market's coming to this level over here, and it's closed some imbalance. All right, let me actually do something over here. Yeah, it's closed some imbalance. Let me grab this. Now, is it ready to turn around? Well, I don't know. I do not know if it's ready to turn around, but what I do know is I'm able to, obviously I don't want you guys necessarily smaller than a 5-minute time frame, but in here, I'm going to be waiting to see again some break of structure for me to make a decision to enter this trade, okay, placing my stop in the safest possible place, yeah, above a swing high or more aggressively above the last high. So look, on a 1-minute time frame, we've just seen this very aggressive push up into these areas, up into a premium of this little range. And remember what I said to you, and I want you guys to remember this, yeah? You always want to be selling from a premium and buying from a discount. Now, it sounds like something that you guys know, like, oh, we know this, Jay, tell us something we don't know. But people don't do it. because they don't draw out their ranges properly. Okay, so I want you to understand that every time the market moves, it moves in a wave. It moves in this impulse. So look at this little range that is traded up within this orange range. Right now, if I was to hit the sell button, okay, if I saw my confirmations, which you can't see on a smaller time frame, oh, my computer's just completely frozen up, stressing out. Yeah. Come on, mate. Come on, what's going on there? What's going on there? Why is it frozen? All right. Is that this up here, this orange line is a premium of this range. Do you get what I'm saying? Even though it's just this impulse up here, I'd prefer to be selling from up here than to be selling from down here. Do you understand what I'm saying? Now, unfortunately, there isn't a lot of structure in there visually that you can see to be able to help you on that journey. All right, there isn't lots of structure there, you know, visually, yeah, that we can see to say, okay, yep, that's the breaking structure, indication, correction, continuation. All right, but ultimately, that is where I would be interested in taking a sell from, is up against that premium. Have a look at it rolling down. Have a look at it rolling down. All right. That's where I'd be interested in that market taking. And I'll tell you what I'm going to do. I'm going to jab on it real quick. Yeah. All right. I'm going to jab on it real quick, which means to you and I that I've taken an extremely tiny trade, a 0 point nothing, yeah, trade, okay, because I'm just watching it, okay, I'm watching it, all right, just so, because I want to move on to some other little pairs, but I want to keep an eye on it. So how I do that is by taking a little jab at it, okay, that's what you can hear, is me jabbing at the trade. Now, I'm waiting on a larger time frame, an indication. I'm waiting on a correction. I'm waiting on a continuation. Unfortunately, yeah, we're not able to get that from our 5-minute time frame. Okay, we are not. Okay, the only thing we've been able to get is understand that we're potentially selling from a premium, right? And I'm just monitoring that by taking a little jab. Yeah, because I believe that the market may have come up, closed an imbalance, and we may be getting a reaction. However, this is just so we can keep an eye on things, because I'm going to move off this trade now. I'm going to pop an alert in, and we're going to wait to see whether or not we're going to get a break off this 5-minute structure, okay, which is down here, indicating down here, making some, sorry, it's already indicating this is a correction. This is the only structure we can see in here. It'd be nice to see this market break. I don't know why my computer's struggling so much, man. To break this level in here, come down here. So this is what you should be waiting for, okay? Like so. Okay. Now, if it doesn't do that, it starts pushing all the way up into here. That's cool. We can see imbalances up here. We can see 50%. You know, this is a 50% of the consolidation range, and we can also see some imbalances up here. And the market could decide, you know what, Jay? Yeah, you think, yeah, you want me to go now, but I'm not ready to go now. I want to go all the way up in here, tap into some imbalances over here before deciding to do anything. But remember, like I said to you, I want you to understand this one thing, especially guys who are taking their challenges, whatever it may be. In every single time you are trading, whenever you're going to hit the button, I want you to do something for me. I want you to always remember that whether the market, let me move over here into a plain space. Whether this market is, look how long it's taking for the line to draw. It's crazy. I don't know why it's moving like this. Whether the market is bullish, whether the market is bullish, okay, or whether it's bearish. This is my bearish little pattern over here. Whether it's bearish, okay, or even sideways in your trading consolidation, you always want to be buying in a discount, selling in a premium. Even if this is the smaller range of a much bigger range, your aim, your goal, sometimes it's not possible. Even in this scenario, it's not going to be possible for you unless you're going to drop to a much smaller time frame, because the 5-minute structure doesn't show it. But you always want to be taking buys from this line, sells from the top line. That's why I always draw my ranges in, because it's always a premium or a discount in different time frames and different ranges. Remember, the market's the same. It's the same on a weekly time frame to a daily it's the same principles. It's just got so much going on, so many layers to it. That's our Russian doll theory. So your Russian doll looks like one doll, until you bust it open. There's another one, and another one, and another one, and another one, and another one. And you could be there all week taking out Russian dolls out of an initial $1. This is the same with the markets. We might be like, yeah, we really want to get in it for the sell. But when you get smaller and smaller and smaller, the market's buying up first. The market's bullish. Do you understand? So for that reason alone, is we always want to take the sell from the top of the range. Or we always want to take the buy from the bottom of the range. It's for that simple reason there. We always want to be in a position whereby we're selling from a premium and we're buying at a discount. Even when you're getting your entry, sometimes, even when you draw the range and you think, yeah, entry's now, and you just wait a little bit, you will see that market push up to the top of that little range, to the premium of that little range. Yeah, whether it's going to be a wick, whether it's something, you will see it push up there and you'll be like, I should have waited. Yeah, it's something that I want you guys to always remember in the back of your mind. And it sounds basic. Yeah, we know that. But when you take your trades, that's not how you enter. Yeah, you know it, but that's not how you enter. You're entering all over the place. Now let's look at this GU for argument's sake. I'm going to wipe this chart clean. We're going to start again. When I start again, I must start on a higher time frame. I don't know what these other traders are doing. I've seen the other traders. I'm happy for them if that's what works for them. But they just start off on the 1 hour. Or they just start off on the 4 hour. Well, good for you. Yeah, that means you can do your due diligence ever so slightly quicker than me. All right. But for me personally, when you open up any chart, you need to understand what's going on with it. If you don't get what's going on with the chart, like, why isn't this resetting? What's going on now? Just struggling. I'm trying to reset the chart. Yeah. Look, if I don't open up this chart like this, I don't know that this market is bearish. This is my bias on this market. I want to sell the Ross out of this market as well. Why? Because it's been trading within this range. And right now, what is it in? Is it in a overall? Is the market in a premium or is it in a discount? Somebody tell me. Somebody tell me. Overall, is this market in a premium or is it in a discount? Just based upon the lines that I'm drawing on the screen. What do you think?
Well, right now it's a premium, isn't it?
I think so. On the much bigger time frame. Yeah. On this much bigger time frame, which is the monthly, we are at the top of this range. This range is telling me something. What is it telling me? Someone describe to me what this orange line, and particularly this one and this one, is telling you. Someone tell me. Give me a ChatGPT summary of what this line is telling us about this market.
It's well,
don't overcomplicate it. What is that? Those orange lines ultimately telling you about that market?
That every time the price goes there,
bounces off.
Yeah, maybe, but even more simple than that. Give me even more simple than that. Give it to me extremely simple. What is that?
The top of the range. The top of the range.
Yeah, that's good as well, but I want it even more simple than that. Like, give it to me because you're explaining it to your 6-year-old, son or daughter or cousin. Like, what is going on? Give it to me simple. I want simple. If trading ain't simple, it's complicated, and we don't want complications in our life. Life is complicated enough. Yeah, what is it simply doing? And this is the problem with your trading right now, guys. This is the problem with your trading right now, is that you overcomplicate some stuff. I'm asking you a simple question. I've drawn in only 3 lines, and I said to you, focus on the 2 thicker lines. What does them 2 thick lines tell you about GBP USD?
It stays within that range.
Yes, but explain that to me. What is it? Somebody knows. Look, come on, for the Tesla, the trip to Jamaica, and the fluffy toy. It's bearish.
Yeah.
That's it. It tells me that the market is making lower lows, lower highs, lower lows, and it has been doing so since 2007. So, I mean, I don't know whether or not, just because I've decided to open up my laptop now in 2024, that's going to go, yep, Jay's open up the laptop now. Now we're going to go bullish, and we're going to start making higher highs. It might do. It might just be a coincidence. It might do. But until it shows me that, I'm rolling with what it's been doing. Yeah? You know your brethren that always gets drunk? All the time. Yeah? All the time that she goes out, she be getting drunk. Yeah? Now you might as well roll with tonight, she's going to get drunk. Until she shows you something different. Yeah? You'd be a mug to be like, no, tonight she's going to stay completely teetotal. Why? The last 10 times we went out, she'd been drunk. It's the same. So right now, when I'm looking at that market, I'm thinking to myself, yeah, potentially, this market is respecting this orange line. Look, well, Kawinky Dink, look at all the data points that have been respecting this orange line. Look, I can see about 15 of them. Boom, 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 boom. Really respecting this line. Even when it came up here like a missile, boom, had a reaction. Now we're back up here, boom, having a reaction. So why do I think to myself that that's going to change? So now I'm looking at this in daily time frame. I want to work out how can I get in? How can I take advantage? Guys, have a look at us just being able to understand of selling in the premium. Where is it? Let's just duplicate this out. And understand this, just because you've seen it happen here, you still stick to your strategy. You still look for what you're looking for. So now that that gold chart that I was just showing you, that I said I wanted to, we saw the imbalance close. In my opinion, it was coming to close the imbalance to make the continuation. Well, it's, you know, both of those positions. I do have two. I am managing at the moment 200k. I'm going for 250 as well. All right, but in both of those accounts, I trade both of them at the same time sometimes. Okay, and there's good points and bad points at doing that, and I will tell you what they are. All right, is just simply selling. I'll say it was US30. I don't even know what I'm talking about. It wasn't gold. I'm going mad. Have a look. Simply by understanding that up here was the premium in the range, we're down here now, and we've now broken that 5-minute structure that I said that realistically is what we should wait for. Look, I drew it here on the screen. Look, if I lie, I fly. Yeah. So on that basis, what am I waiting for now? And what could you be waiting for? Yes, I got in up here, but now we've got a break and a closure on the 5-minute time frame. Look at the time, 9:06. So there's a 9:05 closure here. I'm expecting to see some sort of, somebody tell me, somebody knows. What am I expecting to see after I've seen some sort of correction? Yeah, which might come, it might come all the way back up in here and close this imbalance. It might do. How do I know what it wants to do? I don't know if it wants to come all the way back up in here and close this imbalance. Let me double click that. Both of my those trades as well are also risk-free. I've made them risk-free because it's first thing in the morning, and it could decide it doesn't want to break the structure and push all the way back up in here. But my first call of being when I'm trading is capital preservation. One thing I want more than me, you know, making mad profits is me not losing my account. That's what I want more. All right. So now we've got a closure here below this little area of structure. All right. That was a little bit wicky, but we got a closure below here clearly. I'm expecting to see a correction, and then I'm expecting to see a continuation. The only concern I have is that we're kind of on the bottom of this range here, and it might just disrespect me and say, nah, Jay, we still want to push up into here. Look at that imbalance over here that I identified. Say, nah, Jay, we're going to tap this yellow line, push up into this imbalance. It's Monday, and then we're going to try and do something afterwards. Might do. That's why I'm totally risk-free in the trade right now. Yeah, I'm risk-free in the trade for that reason. And it might come out and just stop me out. It might do. I don't want it to. But it might push up. Let me just check it to see where I am. It might push up and literally just stop me out. I'm gonna actually give it a little bit of space. I'm in there so small. I'm risking nothing. Yeah, I'm risking nothing, like $50, something like that. Yeah, which is nothing in the grand scheme of things. Okay, and just do that. Yeah. All right. It might come and just stop me out up here somewhere. My stop is over above here, right about here, I think. Okay. It might come and stop me out and come and tap into this imbalance here. That's fine. I'll keep an eye on it, keep watching it, and see if when we get up in here, we start getting that breaker structure. Because my overall bias is still I want to see this thing sell off until it breaks some structure which violates my idea. So my idea is the market's come up in here, and we've got an indication. I'm looking for a correction continuation. If it come and start breaking past 50% of this consolidation and pushing up here, but it's doing something else. What it's doing is respecting that yellow range and actually wanting to push up higher into these levels, which is very, very possible. Yeah, it's not impossible. It's possible that it wants to come up here, violate all of this stuff and push up. It's possible. I'm hoping not. I'm hoping that it's respecting these lines. I'm sorry guys, I've got so many lines on the chart, but I'm hoping that it's respecting this. Yeah, and we're gonna start coming down to this blue line over here, TP, and beyond, getting down to that green line that we spoke about, which is 50% of that whole retracement. And then from here, maybe the market wants to push up higher, because the overall energy of US 30 is bullish. Don't get twisted. Though I'm talking to you about, yeah, I'm trying to get in there for the sell, the overall energy, but I just feel like maybe now we're making a bit of a retracement, which is what I identified earlier in this energy here of it. Oops. Of it, come on. Computer's gone mad. Of it breaking structure here. This is structure, these white lines, indication, correction, back up to 50%, then continuation to continue rolling down here. All right, no problem. Let's keep it moving. So GBP USD, same kind of situation. Yeah, they are very similar, GBP USD and US 30. If you don't believe me, you don't know, what you do is you do this, you click plus, and then you just add US 30 on top of your GU. And you try and check it out and say, well, are they similar? Well, yeah, they have been similar. I mean, not obviously similar by what we're looking here on this time frame on a daily. Let's zoom down a little piece. You know, they have similarities. This market has been trading down here, very similar, coming down here when it made a load and it pushed. They have similarities. They're like cousins that they dress the same sometimes. Okay, yeah, we've seen this market pushing down here, then coming up and pushing up. We've seen it pushing down and pushing up. Similar. Remember as well, this is trying to superimpose their price point, so their price structure and their range on top of a GU range. That's why you see it change to percentages. It's not a price anymore. It can't be, because they're two different prices. Yeah, US 30 is one price, and GBP's price. So they're trying to kind of superimpose them, overlay them on top of each other. But it's just to give you the general energy to say, yeah, Jay, I can see some similarities. Look at this big push, zoop down there. Look at this big push, zoop down there. Look at this push, big push. Look at the same. So we can see some similarities. Yeah. So let's have a look. So if we can see some similarities, and I'm saying that, US 30 potentially could turn over and go to hell. I'm looking at this GU also. Let me get rid of this. Put it back to price. Where's the market? Did I delete it? Oh no, it's okay. And I'm saying that this market has been respecting that orange line, making lower lows and lower highs. And right now, when this market came all the way up to here, if I was to draw my lines in, the lines would have looked like this. Oh, Jay, why are you drawing your trend line like that? My trend line's like that because I must touch the last low before the highest point. Because then that gives me some understanding of at what point are we turning around, and if this market was going sideways at all. When this market came up here, pushed down here, broke structure, indication, corrected, continued. We're down here now, breaking structure once again, below here, below here, below here, indication, correction. I'm expecting again for it to continue. I can even do this, watch, putting another little line in here, touching some data points. Because my data points are not my opinions. That's one thing I like about when I draw my trend lines. Those trend lines are not my opinion. These are factual data points that have happened historically. That the market, boom, turned around here, boom, turned around here, boom, turned around here. Now, are they to the millimeter? No, because I could be drawing them wrong. Yeah, I could be ever so slightly off. Owando could be giving me the candle slightly off. But does it give me a general energy range of how this market's been moving down? Yes. So now it's coming back up to the top of this range. After breaking structure. If you can't see structure, have a look at structure. Structure. Yeah. Structure. After breaking past some of these levels, this is more major structure than over here. Okay. I'm expecting to see a correction because the market's moving waves. That's supposed to be a wave. All right. And it's coming back up here. This is its correction of this impulse. And again, if I wanted to, and I wanted to add some additional confluences to maybe help me, I can maybe pull out a line from this impulse down to here. Yeah. That 50% area is right there right now. Now listen, 50% ain't the be all and end all. Sometimes it can push up to 618. And in this instance, I'm not only adding the fact of that 50% area, but I'm also looking at, because I understand how to trade, the concerns. And the concerns are, even though the 50% is down here, we can see what up here in this golden zone. What can we see? What can we see?
Imbalance.
Imbalance, that the market may choose to say, you know what, Jay, yeah, 50% is there, but I'm going to push up further into that imbalance first. So I don't really know whether this market, like I said, wants to push up in here first and then start rolling over or not. Let's drop our time frame down to our 4 hour because we're still in the daily. Now on the daily time frame and the 4 hour, this market is bullish. It's bullish. It's making higher highs and higher lows. Okay, I can't get in here for the sell until it does something else. You know, I cannot. I can't just be like, yeah, I'm selling it. On what basis, bro? On what basis are you hitting the button right now? Unless you're telling me that you're putting your stop way up above these levels here, which is fine. If you're doing that, that's fine. Massive stop. You've got no reason to get in this. Watch me drop to my hour time frame. There's nothing here telling me Jay hit the button for a sell right now on GU. There's nothing saying right now go for it. Yeah, though I'm definitely watching it as it pushes up into those levels. At the moment, it's only making higher highs and higher lows. Even this little push down here, this one here that broke some structure. Okay, maybe indication, maybe correction. Did it continue? No. So I can't be in there for the sell. The only thing, if anything, I should be in there for the buy as this market's going higher and higher. So maybe we might see GU initially. Let's see what kind of distance we're talking about. Initially, we could see it push into here. That might be today. That might be the market, and that's exactly why my US 30 is risk-free. Because for that same reason I said to you that we saw that imbalance above. Can you see how I'm using the information? I'm saying to myself, GU and US 30 are kind of ugly cousins. They're not so, you know, Siamese cousins, yeah. They're not so Siamese, you know, sisters. They're similar, not the same. And on US 30, I was concerned about a little imbalance that the market could push up to. And then when I'm looking at GU, I'm saying to myself, but also with GU, it's not giving me anything to say it wants to turn around now. So maybe I might see GU pushing up into here for 80 pips. 80 pips on GU is a lot of pips. That could happen for the whole day today. They're pushing up into these levels until it gets up into here, which then, have a look what I was just been telling you guys about. Where I really want to sell from is where? Of any range. Where do I really want to sell from in any range? A premium. So even though right now I'm like, yeah, maybe I'm thinking to myself that it's going to sell around. Really? In an ideal world, I prefer to be selling up here on that blue line. So therefore, that might mean that this market today, later on today, next hour, who knows, by tomorrow, I might just be pushing all the way up in here. And when we get up in here, I'm going to be very, very like, yeah, okay, I'm ready. It's come up here, it's closed an imbalance. We've got into the 618 and we're all the way at the top of a premium. If I start seeing indication, correction, continuation on a smaller time frame up here, I'm in. I'm not ramping. I'm in because I'm selling from a premium. It's done what it's needed to do for me. And look, that US 30 that I protected myself for because I was concerned about has just stopped me out for nothing. Now, I was up, you know, a few £100, and someone might say, yeah, you could have taken it. I could have. But at the same time, this is a game. And I'm trying to make sure that I can gauge as and when things are going to go in my favor. So that concern I had is why I protected my position. Because first and foremost, the very first thing that I'm interested in is, as I mentioned, capital preservation. The fact that I made no money now, who cares? Doesn't really matter to me. So now, if I start seeing this structure now breaking above on a smaller time frame, have a look, US 30, we're here. Even though the market was going sideways over here, but maybe it just wanted to push down to this discounted area, which it did. And maybe from this discounted area, we're going to start pushing all the way up in here, maybe to 50% of this range here where this imbalance is, maybe beyond. Maybe it says, you know what, wow, we want to just keep going. We don't care about your idea, Jay. We want to push all the way back up to this yellow line, maybe. So now I've seen that structure. It just wicked me out. Now it's actually pushing in the opposite direction. So let's have a look. It just wicked me out, which is fine. I have no problem with it getting wicked out because remember, on a larger time frame, I got in here, up here somewhere. Okay, so it looks like the spread just wicked me out. But on a larger time frame, on a 5-minute time frame, we was waiting for a 5-minute close below this structure, which we got. Okay, we was waiting for a correction, which we've just got. So therefore now, if this market comes and closes down below here, which is going to be this idea here, which I drew, then I'll get back in. I protected myself from the smaller position because I didn't want to take an L. All right, because I'm concerned. Monday, I'm concerned. I've seen this action here, and that's because I took it early. Remember, I took it early just from a premium without getting my indication, correction, continuation of 5-minute time frame. But if I get it right now, my indication, my correction closing imbalance, and then my continuation coming down here, I'm in. You can choose to be in also. It's down to you. And where am I gonna? What size is the zone? It's gonna be from there all the way to here. It's gonna be my aggressive entry for 22 pips. My safer entry is gonna be here for 32 pips. My safest entry is gonna be all the way up here somewhere, which I'm not interested. All right. So at the moment I'm looking at it here, I'm actually hoping I can get even a smaller entry if the market doesn't break here straight away. We've already got a 5-minute close. Look, it's 9:20. That 5-minute close didn't quite make it below here. So I don't think we're going to be able to wait for a 5-minute close. All right, again, well, we are going to be able to wait, but it's going to be bigger. But I'm looking at it right now to see at least if I can get a 1-minute close below this level. So I'm going to pop an alert in here. I don't have to sit there with my mouth open. And that, though it might be difficult to see, would be a small indication, a correction, and then a continuation here. Look at it on a 1-minute time frame, it's clearer. See, the market is pushing up in this orange range here. Then we've broke structure. We broke this level in here and we closed below this thing. And then we came up here and we closed the imbalance with a correction. And now I'm waiting for a continuation over here. Below this level here. You see it? That's my thought process. Now it is quite aggressive. Yeah, it is quite small, it's quite aggressive, but that's my thought process. That's what I'm looking for. Now, if I don't get that, then fine. Maybe the market didn't want to come down here. Maybe it was ramping, who knows? Yeah, maybe someone was hitting the cheat code and, hitting L1 and R1 at the same time on the controller. I don't know. Yeah, but either way, I'm looking at it until it comes up here, starts violating up here and doing something else. And I go, okay, no problem. I delete this little area here and say, okay, it's not doing that. I can get rid of this imbalance now because it closed the imbalance. And now I'm simply waiting for, this is the idea I'm looking at right now. Is this market going to do that? But I'm concerned. I am concerned about that imbalance above, as I mentioned. And I'm concerned because I'm looking at GU. And GU at the moment hasn't given me any type of inclination of what it wants to do. Now, I'm not trying to say that that's the be all and end all, because they are two different pairs. Yeah, they do have different needs. There is the Great British Pound that's all in the mix there. But we can see here, for argument's sake, this market was pushing up like this. Okay, that market was pushing up like that. And we can see right now, boom, a lovely 5-minute close breaking this structure. So it's in the exact kind of same scenario as US 30. We've broken this structure, potential indication. Now this is a potential correction. Are we going to get a continuation below this level for GU, just like the same question we're asking about US 30, or is this still trading within this little blue range that you can see? It's this little blue dotted range that you can see. We don't know. I'm going to know if it closes below here, or I'm going to know if it starts pushing back up into this level and doesn't give a damn about what's going on here. I'm going to say, okay, but we're still trading within this. I'm going to change blue because we've got some blue. I'm going to make it orange. That we're still trading within that little orange range. So that's not a bad for you guys who's at home today, who's interested in taking some trades. Pop your alerts in here and see what's going to play out. Are we going to close down below here? Or are we going to continue pushing up in here? Now, if we continue pushing up, we got to ask ourselves, where might we be going? Yeah, and where might we be going if the GUs, like I said, is potentially up into these imbalances up here, yeah, which is a good 70, 80 pips. And the same thing with our US 30. And this market keeps pushing up here and doesn't close down below here. Where might we be going? In my opinion, at least up into this imbalance over here, which is from where we currently are, 35 pips, maybe even beyond. Maybe 35 pips up into that imbalance there. But if we break that 50% level, then this market could keep pushing up because unfortunately or fortunately, however you want to look at it, we are at the bottom of this, a bit of this yellow range. Yeah, see this yellow range here? We are at the bottom of it. Maybe this market wants to push all the way up into 50% of this previous little consolidation, which is a little bit higher than it. It's a little bit up here. All right? That's not impossible. that this market wants to actually push back up into 50% of this consolidation, which would mean us seeing US 30 pushing back up into that blue line over there. That's not impossible. Yeah, and that there, let me see distance wise. Yeah, it's about 100 pips. Correlates a little bit, you know, better with the GU. So I'm using GU and US, though they're similar. And what I would say is this, is you really don't want to trade them both at the same time. If you trade them both at the same time, you've kind of got your eggs in one basket. If you're wrong, you're very, very likely to be wrong on both pairs. Yeah? So really, whichever the one you like the market structure best, that's the one you should trade. Trading both of them, you could be right on both of them. Yeah, I know someone's thinking like that. So thinking, yeah, but Jay, you could be right on both. Yeah, you could be. Yeah, but you could also be wrong on both of them, which you don't want to do. In trading, you want to hedge. You want to be like, if I'm wrong on this one, you prefer to be like, I'm right on this one. Yeah, you don't want it to be the case that you're wrong on both of them. Well, it just depends. All right, but I'd say take one trade at a time. All right, understanding that you want to manage your risk, and first and foremost is capital preservation. So we can see Monday markets hokey cokey and around here. Even right now, if you really wanted to, say if it was up in this US 30, I could potentially draw a little box around here, you know, just like this. Look, just like this, little box around there saying at the moment, Monday, the market seems to definitely be doing a little shimmy in that area in here, because we broke structure here. We've come back up into this level in here, closed the imbalance. Really, I want to see this rock and roll outside of this little area right now. And at the moment, it's coming back up in here. It's closing more imbalance. It's just ramping, but it's Monday. Any questions, guys? Any questions real quick about what we've been talking about? The strategy that I trade is fundamentals. It is the fundamental building blocks of trading, yeah, of any market. It's about price action and market structure. It's about understanding premiums and discounts. It's about understanding where you are in the bigger structure, i.e. our Russian doll theory. Are you at the top of a bigger 4-hour range in a premium, and you're now looking at it on some small range on a 5-minute time and say, yeah, I'm going to buy it. You're going to buy it into a big 4-hour wall. Imagine that the time frames are how thick the walls are. A big 4-hour wall. You want to buy head first into that wall without getting any confirmation that you broke through that wall. I don't think it's a good idea. Oh, you want to sell from a big, massive 4-hour wall? That sounds possible. Because you was running in there like a little 1 minute or a little 5 minute or quick. But when you hit that 4-hour wall, you're going to bounce off it. It's a big 4-hour wall. Unless something else happens and the market shows you, wait a minute, this 4-hour wall is actually not as tough as you think it is. And you're going to go, oh, okay. And you're going to watch it then to see whether you break that 4-hour high or low. And then you're going to say, okay, might have been a fluke. That little break might have just been a fluke. You want to see it. You want to see it correct. So everyone gets a chance to think about it. Like, you sure you want to go past this 4-hour wall? And then you want to see people say, yeah, man, screw the 4-hour wall, and then continue. Then you go, okay, cool. Forget the 4-hour wall. But until it does that, you're not doing it. You're not taking your trades based upon a hunch. You're not taking it based upon faith. You had a dream. Some YouTuber said this online. You're not doing that. You're going to say, I want to see confirmation. I understand this strategy. I understand that right now, for argument's sake, we're potentially, you know, at the bottom of this little yellow range, depending if I've drawn it well, which is very possible, I could have drawn it terribly, all right? And that may mean that this market just wants to, it's discounted and you want to push up in here. So ideally, in an ideal world, I want to draw this yellow line better to make sure it's in the right place, but I want to see this price here breaking outside of that market. It's no longer in that yellow line. It's coming out of that yellow line. That's what ideally I want to see, which from how I've drawn it at the moment, let me try and zoom out. I don't know whether or not we're seeing it. Yeah, we're not really. We're not really seeing. At the moment, we're sitting in this discounted line. The only thing that's giving me a little bit more, you know, vim, yeah, of wanting to sell it is this bigger white Russian doll structure. See it? So even though this smaller structure, we're at the bottom of this yellow range, this bigger Russian doll here, that white dashed line is making me think there's a boy. It's a big old line there. I don't know if it's going to bust through that wall. So my bias is still bearish. Yeah, because that bigger white line is a bigger, badder, bossier line wall than these yellow ones. These yellow ones are just, in my opinion, part of this correction after this market indicated what it wanted to do. I hope that makes sense, guys. I hope I've made sense in trying to break it down. Now, if I'm wrong, it's fine, because I can't predict the future. I'm only basing my decisions based upon historic information, and things change in the world. Yeah, I'm sure Al's going to tell us about some news that's happening in the world. Something we've seen banks collapse. You know, even though it's a small bank, we saw it's called First Republic. I can't remember what it's called. We saw a small bank collapse.
There's Grand Rising on.
Yeah, it's amazing day, my bro.
Yeah, basically lots of things happening in regards to the markets. I don't know if anyone was up at 12 o'clock last night. The yen, there seemed to be some intervention in the yen last night at 12.
I saw that.
You go
I did see that.
GJ or UJ, you'd see that at 12 o'clock last night. However, one of the banks, American banks, there is failing, and the issue we have is contagion. We don't want it to. Well, it doesn't matter if it's contagion, not for our sakes, because we trade on what we see. However, if there's contagion, there will be a sell-off of indices and so on and so forth. And this week's a really pivotal week. We've got Fed on Wednesday at 7 o'clock, and we've got non-farm payroll on Friday. Two massive piece of news. So the market may go sideways tomorrow and Wednesday morning due to non-farm payroll. Due to the Fed, and I believe the financial community, or the analysts and so on and so forth, are waiting to see if the Fed are hawkish or dovish. And I believe he may be hawkish, old Chair Powell. They're not going to cut interest rates. Possibly this year.
Explain what do you mean by, I know I always ask you, but explain the difference between hawkish and dovish okay, for the people that may not know.
Right. Hawkish is where they are aggressive, where they say, well, we're not going to cut interest rates. We're basically going to, nothing's going to happen this year. And it's possible next year due to interest rates, due to inflation not coming down. So that's a hawkish talk. Yeah. Right. Where they're basically saying to the market, it's not going to happen. Yeah. So if they say that, there will be a sell-off. Yeah. The dollar will get stronger and there will be a sell-off on Wednesday. Mark my words. If he's hawkish on Wednesday and he comes with that tone where he's basically said they're not going to have no interest rate cuts this year, because bear in mind, the market started off with 6 interest rate cuts they thought that were going to come out this year. However, because of the way the US economy is now weakening slightly, I believe, and others believe, that there may be one at the back end of the year. There won't be one before the election, because that will be election interfering. Yeah, so there won't be one before that. So hawkish is basically saying, well, nothing's going to happen next year, possibly. Yeah. Dovish now is basically being, well, you know what? Yeah, we're going to get a few in this year. Ideally, we're looking to get it in July or September. The market will look favorable to that and see that as a dovish statement. Any questions on that?
Understood.
Yeah. So Fed on Wednesday, non-farm payroll on Friday. We've got a lot of Euro news coming out tomorrow, German news. But the big one is Wednesday. However, as I said last week, what's the yen for more intervention from the BOJ, and also watch the indices in regards to if there's any more banks getting into trouble. Because if there are more banks getting into trouble, it will affect the US 30 and it will definitely affect the US 500.
How do you think it would affect crypto?
It will sell off. Crypto will sell off as well, because it's a risk asset. Yeah. What do people do first when they need money? They sell off their risky assets.
Yeah, that makes sense. Does that make sense to everybody else? What Al said. Does it make sense? So I was giving some
Yeah, perfect.
spilling some sauce
Yeah.
in it. Spilling some sauce, and it's true. That's what you do, you know, in a risky time. You sell. I mean, when you're concerned, you do sell off your risky assets. Oh, I'll get rid of those. I'll get rid of that. I'll get rid of this. And hence the reason why gold goes where when people are concerned about things.
Yeah, flying high.
Gold pushes up higher. Yeah, gold pushes up higher when people are concerned. All right. And what you're probably going to find, this is why some people say that they don't trade on Mondays, is because this news and stuff happened over the weekend. Was it Friday that information came out? All right, so we're
I
just going
believe
on
so.
US.
Friday or Saturday, yeah. I mean, I dropped it on. It's crazy because we've had this before. About 12 to 18 months where we had issues with banks, American banks, where banks were bought out. I think JP Morgan bought a few. There was a liquidity issues with certain banks, and that's not gone away. To be fair, the US economy is slowing down. It is slowing down. I think non-farm payroll is going to be a factor on Friday to see where we are. If the jobs market is going down, then it's definitely slowing. So yeah, as we are doing, we're looking at data points. So is the Fed. They're looking at data points to see where the market's going, and they're looking at more than one data point. They want to see a trend. Yeah, if the trend tells them, you know what, the market is the economy is shrinking, then they will cut interest rates to help the market. Yeah, so be cautious with that. But right now, we've got a number of things going on. We've got the war in Ukraine. We've got the Israel-Hamas conflict. Yeah, so a lot of geopolitics going on due to American election. Listen, it's a wild time. Yeah, it's a wild time. But everything is based on data points. The market moves on data points. Yeah, right. It's been doing that for the past 3-4 years, even probably before that. Most definitely. Yeah, the market now is heightened by any news, right? Any news. So just be mindful of that.
For sure. So guys, good morning, God bless. We're looking at this US 30. Keep an eye on it to see where we're going to get a structure closure below this level in here. All right. Ultimately outside of this box, but below this level. Okay, because we was waiting for a closure below here. We never got it. That's why I've got my indicators over here. If you can't see them, here they are. All right, we're waiting for a closure below here for a potential sell-off. If not, and the market starts doing something else, it's fine, because we do see this concern over here, which is some imbalance above. Okay, and the market might decide it wants to start pushing up into if it does, and you're able to get into the buy, good for you. If not, you're going to wait till the market gets up into these other concerns, these other levels where you're believing there pivot points where the market might turn around, and then you're going to be waiting for an indication, correction, continuation, ultimately on no smaller than the 5-minute time frame. If you're very comfortable, you can drop down to the 1-minute time frame, but I let you know it's higher reward, but it's higher risk. You're going to get stopped out a lot quicker, which maybe you like. Sometimes some people prefer to get stopped out now than for the whole day to play out and then you get stopped out. All right. But I'm just letting you know that ultimately when I teach, I try not to get you guys down on the 1-minute time frame because it's very windy. You know, my point about when I say windy, I just mean that there's a lot of things going on down on your 1-minute time frame. Yeah, smaller news is going to have effect on the market. Orange folder news, yellow folder news. Stuff that isn't necessarily that dramatic, but on a 1-minute time frame, when you're so small, these things are going to cause volatility that could stop you out. So though we all want to be in a trade with a massive lot size and it going well, 5-minute is a safer place to say you're looking for indications, corrections, continuations. Obviously 15-minute. Now, when you hear me start turning around and saying 15-minute closures, guys, you could be on the 5-minute time frame and get a 15-minute closure. What do I mean by that? Somebody explains to me what I mean by that. That I'm here looking at the 5-minute time frame here, and I can wait patiently, even though I'm on the 5-minute, and I'm waiting for a 15-minute closure. What does that mean? What would I be doing? What would I be doing to be able to achieve that?
What's that? When you're waiting for the clock to go on either 15, 30, 45.
There you go. Because I'm here, even though I'm on a 5-minute time frame, I'm looking at 5-minute candles. I know that in the next 1 minute, 6 minutes, 6 minutes, 15 seconds, I'm actually going to get a 15-minute closure. So I don't have a problem with being patient here for 6 minutes, because maybe the market's waiting for that. And then on this 9:45, I'm going to get a closure down here. Maybe. That's why I stay calm. Because at the moment, at 9:39, like this candle that just happened close right now, that's only a 1 minute closure. 1 minute closure, maybe a 3 minute closure. Do you understand what I'm saying? It's like that isn't necessarily aligned with other time frames. And what is the point of that? What is the relevance of that? Is that you might be looking at it on 1 minute. Good for you. But you know, the likelihood is there's going to be more traders looking at it at 5 minutes for closure. And then the likelihood is going to be more traders looking at it at 15 minutes for closure. Because the higher the time frame you get, the more solid that structure is. Do you get what I'm saying? So there's someone out here he's going to wait. He's waiting for a 15-minute closure, or he's waiting on 15-minute for him to enter the market. And when people see that, then all of these orders are coming in at 9:45. And if all of those sell orders coming at 9:45, then the market will move. Whereas are all of the sell orders coming in at 9:37? Who cares about 9:37? Why is 9:37 relevant? It's not that relevant. It's only relevant on a 1 minute time frame, as it's a 1 minute closure. But what other numbers divide into 37? Do you understand what I'm saying? Whereas that's why people wait for the hour closure. That's why when you're sitting here and we're sitting here and you see 8 o'clock or 9 o'clock come, we see, boom, this reaction at 8 o'clock. When everyone's go, okay, let's see what's happening now with all the traders at the desk. Okay, let's go. At 8 o'clock, boom. Because it's an hour. It's like on the hour. So we're getting 1 minute closures, 3 minute closures, 2 minute closures, 5 minute closures, 10 minute closures, 15 minutes. All these different closures are happening on the hour. And all of these orders are piling in. You don't say to your brethren, come meet me at 8:37. Slicky. You say to him, look, meet me at 1:45 or meet me at 9 o'clock. You don't say meet me at 8:36 and 32 seconds. He's like, what are you talking about? It's the same. It's the same in these markets. That's why there is a significance between time and how you see the markets move. Yeah. And you'll see this more so, especially when you align this also with our sessions. You know, with our sessions. That you see certain things happening on the session open when other markets are, sitting down at their computers and getting ready to do things. Guys, good morning. It is Monday. It is 20 to 10. Thank you for being here. Thank you for being present. I'd like to play something. Maybe we'll play something in with trading as well. If you guys want to look at some more stuff in regards to trades, just looking. So I've got nothing in particular. Trying to play something that we haven't already watched. I'd like to play something that we've already watched, something that came out 20 hours ago. The 22-year-old Indian trading prodigy called Umar Punjabi. Technical analysis is just enforcing your own ego. That's what he says. This is going to be interesting. All right. So guys, good morning. God bless. Thank you for your time.